Welcome to Strategy Saturday. I'm Charles Carillo, and today we're going to be discussing why do people invest into real estate. There are so many obvious reasons to consider investing into real estate. Owning a physical asset, saving money, if your mortgage was comparable to what you're paying in rent. Also tax benefits, mainly being that capital gains taxed at 15 and 20% is usually considerably less for this person than your ordinary income rate. But today we're going to look at some less obvious but equally important reasons to consider allocating a portion of your capital into the asset class that's created 90% of millionaires over the last 2 centuries. So compare the returns to the stock market. The U.S. stock market, as defined by the S&P 500 index, has historically returned just over 9% from 1825 to 2019. Since 1940, the median home value in the United States has increased at an annualized rate of 5.5%. On the surface, this 3.5% to 4% difference is fairly significant, but it only takes into consideration price appreciation, not potential rental income. And if we're investing for cash flow, there's definitely going to be rental income. We would also contend that with the stock market currently at all-time highs as measured by the Wilshire Total Market Index compared to the U.S. GDP, it will return far less than 5% annually over the short and midterm, making real estate a more attractive option. Consistent source of passive income. This is my favorite part of investing in real estate. Unlike the majority of stock investments, except for the very few publicly listed businesses with consistent dividend histories going back 20 years or more, a residential, commercial, or industrial rental property will provide an owner with consistent monthly income, provided a reliable tenant or reliable tenants is in place, which far less volatility just goes without saying. Now, there's a lot of things you can control the property. Preventative maintenance. If you're taking care of the property and it's managed correctly, you're going to have a lot of predictable costs in the future. You're going to know, hey, my roof has to be done in 7 years, or this hot water heater's got 2 more years left on it. When you're doing this, you can put away the correct amount of money every month, and that allows for you to still have consistent income. And then when those large CapEx items come up, capital expenditure items come up, you're able to have the money from your reserve to pay for them. Another great point is a long-term investment. This is also another one of my favorites. And most people find this as a negative. You're not liquid, it's not a liquid asset, and there's ways of getting money out of real estate pretty quickly, and you can do that by refinancing it, which is probably the easiest and best since it's tax-free. But if you're purchasing a property and you can't sell it right away, it removes a lot of emotion from it, because if you're to sell a property, it takes time. And in a normal market, it might take 30, 60, 90 days, right? 3 months almost maybe to sell a property from the time that you list it to actually getting money in hand. So in that time of preparing for that, there is a lot of emotions can be put on the sidelines, and it allows you to kind of stay focused on what your plan was from before. Also knowing that when you're going into real estate investing, that it is 5, 7, 10 years. Now, obviously, there's some people that do on a much shorter term than that. What we do here at Harborside Partners is we're buying for cash flow, and we're buying for property appreciation once we've added value. So it's really important to put your blinders on, since there's no daily ticker symbol to check out, and you don't know exactly if your property's gone up or down. Real estate takes away all that emotion from your investing. The other reasons that we like is leverage. As you build up equity in your property, an equity line of credit can be used to acquire other income-generating properties. However, we would be careful of this, because over-leverage can leave you vulnerable, and in a worse case scenario if having none at all. So it's much better to, when you're using leverage can be used as a benefit, but it can also be very dangerous if used incorrectly. It's a tangible physical asset, as we said before. So physical assets, much safer bet and much less volatile than other investments. Real estate gains are deferrable. So this is very important. With real estate, there's tons of tax deferment options between all the depreciation and then between this one, the 1031 exchange. These are probably most widely known, and it permits the gain on the sale of an investment property to be transferred from the property being sold to a new property being purchased, thereby deferring the payment of any tax on the sale of the property. This is extremely important. It's also important that you need to have professionals that have done this before when you're planning on doing it, but it just shows what is possible with investing in real estate and why people invest in real estate when you're comparing it to other asset classes available today. So please remember to rate, review, subscribe. Please submit comments and show topics at globalinvestorspodcast.com. Look forward to 2 more episodes next week. See you then.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.